Thank you very much for having me, Matt. I think the main reasons why we saw these consolidation wave, it's probably because some of these banks have common shareholders, and these shareholders are trying to reorganize their assets. If you compare the situation with what happened in Europe in the 90s, I think it's different. The economic added value of the deals was not the primary driver, but it was more the fact of having the same shareholders, these shareholders coming to the conclusion that it's better for them to consolidate their assets. It would help them to improve the profitability, do things much more efficiently. And this is why we saw this consolidation, this wave of consolidation. And this is why we think that we're probably coming to an end, because if you look at the shareholding structure of the remaining banks, especially in these two banking systems, Oman and UAE, we think that probably we're coming to the end of this first wave of consolidation.
Does that mean that there's a second wave of consolidation on the way, or are we going to see activity really taking a stall in momentum from this point on, as you point out?
Could be, and I think the second wave could start if the pure economic rationale is the driver of the consolidation or of the merger. And I think that would require having more aggressive management teams, like coming to their boards with proposals for merger with different, with other banks in the system, and having also shareholders that would be accepting to lose the majority in some cases.
So
and with this wave of merger, we can start to see, for example, consolidation between the different Emirates, or even cross-border consolidation at the GCC.
Sorry to interrupt you there. So I was just going to say, essentially, it's almost like a safety in numbers proposition when it comes to this activity we've seen. But how are the GCC banks faring when it comes to some of the global headwinds that we're seeing impact the banking sector more broadly globally? I mean, global interest rates at the lowest level since 2016. Number of banks, of course, seeing renewed pressure on margins. So how are banks in the Middle East riding out that challenge?
Yeah, thanks a lot. I think they're doing relatively well. I think if you look at the environment at the GCC, it has shifted quite a bit since the second half of 2014, when oil prices started to drop. The pressure started to increase on some economic sectors across the GCC, including the real estate sector, including the hospitality sector. And despite all these pressure, I think the banks have been faring relatively well. If you look at their profitability indicators, yes, there have been a deterioration because of the increase in cost of risk, but overall profitability remains good. If you look at efficiency, banks in the GCC are among the most efficient in the world. If you look at the liquidity picture, there have been some pressure here and there in 2015, 2016, because of the fact that government and government-related entities' deposits represent a significant portion of the deposit base, and because the flow of money has dropped as a result of the drop in oil price. But overall, I think the banks have been relatively resilient.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.